Fed likely to resist pressure to cut interest rates this week. The U.S. Federal Reserve, facing new demands by President Donald Trump to cut interest rates, is expected to leave borrowing costs unchanged at a policy meeting this week but possibly lay the groundwork for a rate cut later this year. New economic projections that will accompany the U.S. Central Bank's policy statement Wednesday will provide the most direct insight yet into how deeply policymakers have been influenced by the U.S.-China trade war, Trump's insistence on lower interest rates, and recent weaker economic data. Analysts expect the Fed is also widely, though not universally, expected to remove a pledge to be patient in taking future action on rates, opening the door to a possible cut at its coming policy meetings. Risks may be rising, but the federal funds rate is currently set in a range of 2.25% to 2.50%. The Fed's Policy Setting Committee is due to release its latest statement and economic projections at 2 p.m. EDT 18. Mind the dots. The Fed's last set of economic and policy projections, released in March, showed most policymakers foresaw no need to change rates this year and only very gradual rate hikes thereafter. But since that meeting the economic outlook has become cloudier. Recent U.S. retail sales numbers were strong. But while unemployed, the Atlanta Fed forecast on Friday that gross domestic product will increase at a 2.1% annualized rate in the April-June quarter, a drop from the 3.1% pace of the first 3 months of the year. Trade uncertainty has increased as well, with Trump using the threat of tariffs on goods from Mexico to force the country to curb the number of mostly Central American immigrants crossing the U.S.-Mexico border. He has also vowed to slap more tariffs on Chinese imports if no trade deal is reached when he meets Chinese President Xi Jinping at a Group of 20 summit at the end of this month in Japan. Concern that mounting tariffs could further slow U.S. and global economic growth is one of the chief reasons traders in interest rate futures loaded up on contracts anticipating 3 U.S. rate cuts by the end of the year. Fed officials may have reason to trim their rate outlook a bit, but meeting market expectations would involve a dramatic shift. 9 of the Fed's Powell. Adding to the pressure for a rate cut is a yield curve inversion in parts of the market for U.S. government debt, historically a precursor of recessions. The 3-month Treasury and Trump, who has said that rates should be lowered by perhaps a full percentage point or more, continues to publicly berate the Fed and Powell, his hand-picked chairman, for refusing to act. Downward shift. Most of the more than 100 economists polled June 7, 12 by Reuters say they are not penciling in a rate cut until the third quarter of next year. But views are shifting within the U.S. Central Bank, St. Louis Fed President. Several others have signaled a readiness to move off their wait-and-see stance, with Powell saying earlier this month in a speech in Chicago that the Fed will act as. The word patient, which had been repeatedly used by the Fed since early this year to signal its willingness to hold off further rate hikes, was notably absent from Powell's remarks, though the Fed chief stopped well short of suggesting a rate cut was coming soon. The Fed raised rates 4 times in 2018 but has since abandoned plans to continue lifting borrowing costs this year. It is likely to avoid signaling any move to cut rates until it is ready to deliver, predicted Bruce Monrad, a high-yield bond portfolio manager at Boston-based Northeast Investors Trust. Nevertheless, Monrad added, Fed policymakers may have tied their own hands by letting bets in financial markets stray so far.
Raindrop, drop top smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park pot.